And that felt nice. So in fact, I think, had lunch with many of you today, and I don't know, but in the average life of a banker, half a day spent in the central bank, coming out and then having to listen to a central banker for a pre-dinner is is probably not an ideal day, I expect. I'll try to keep it light. I'm sure you have already had a heavy session earlier. So we'll try and keep it light, and the work has been made easier by my previous speakers. Coming to the formal speech, Chairman IBA, Mr. Goel, Chief Executive, Mr. Mehta, Chairman SBI, Mr. Khara, ED RBI, Mr. Chaudhary, all MDs and CEO of banks here, and fintechs, and other participants, members of the media, and my colleagues from the Reserve Bank of India as well. It's a privilege to be speaking in this IBA event on a topic which surprisingly nothing much is happening globally in terms of actual activity, but a huge amount of discussion and meetings take place on the topic. So last 1 year I might have had, let's say, 10 meetings with international organizations, and they keep asking, and I get tired because I just have to repeat the same things. Not much has changed, since 3 months back when we talked, that sort of a thing. But then, as Chairman Khara said, this potentially could be a game changer to the financial market. So we have to be careful in the way we proceed. So it's important that we actually understand what the product is and we take our forward steps accordingly. Thank you, IDEA. I think the first time I spoke on the IDEA platform, as Mr. Mehta said, was on cryptocurrencies, and my crypto friends were not happy. I spoke once after that here, I think in Trident itself, and some of my banker friends were not happy. I spoke on the UPI, so they're not happy. So I've made it a point that today I'll keep everyone happy. There won't be anything negative. Coming to the issue, I mean, all of us know that we are going through a general fintech revolution that is changing the entire landscape of financial markets. As I've told earlier, in a couple of other meetings or speeches, these changes are largely in the nature of change in processes or delivery of financial products. The basic financial products remain the same. There is still the loan, there is still a deposit, there is still a payment instrument, there is still an insurance product. It's just the way that we process these products, the way that we identify potential customers, the way that we evaluate the customer, and the way that it is delivered that has changed. So fundamentally, this is important to keep in mind. A narrative that goes somewhat against this is that of cryptocurrencies. So they say it's not just the process, but the product itself is new. This product did not exist. A closer scrutiny, as I have dealt in more detail in my crypto speech, a closer scrutiny reveals that may not exactly be the case. The innovation in cryptocurrencies is essentially, if you read the white paper of Satoshi Nakamoto, the innovation, the title would, the very first sentences would be a peer-to-peer transfer network. It is a transaction. It is a transaction protocol that enables authentication of transactions in the absence of a trusted intermediary. What he means is a bank, typically, in our system. So that is what is the key innovation there. In fact, if you read the history of blockchain or history of authentication, you would actually see that right since the 80s, people have been trying to solve this problem of what they call double spending problem. That how do I ensure that the same digital instrument is not spent twice? How do I authenticate transactions? So that is what the innovation is. The innovation is not cryptocurrency itself. Cryptocurrency itself is not inevitable to a blockchain. A blockchain can exist even without cryptocurrencies, and it can perform various other tasks. So, and then closer look at the currency itself reveals that it's neither a currency nor an asset nor anything that the way we understand. Now, this is something that looks straightforward to me, but it is very difficult to establish globally, because you would see, you would see global agencies or central banks or anyone writing about this typically refer to them as assets. And you ask a question, what kind of an asset is it? Is it a financial asset? Then please tell me a financial asset which doesn't have someone who has issued it, which isn't someone's liability. So how would you define it? So that issue actually tells us that while cryptocurrencies technologically is an innovation, the innovation is that of the underlying blockchain or the distributed ledger technology. The innovation is not really in the currency. And that brings us to CBDCs, effectively. Why? Because the basic use cases that were shown to justify cryptocurrencies, apart from decentralized finance or taking away intermediaries, which is not something that's going to happen very soon, is that it can do the functions of currency, functions that other payment instruments, which are largely based on deposits, which are largely based on transfer of money from one deposit account to another deposit account. Now, it is an improvement on that. Now, why CBDC is important? Because CBDC shows that its features, it's a currency, so it has the features of a fiat currency. It's a digital, it is digital value, so it also has the features of a bank deposit, which is largely digital these days. So it can be transacted. So, compared to currency, the anonymity that currency has, that can also come to CBDCs. Now, given all this, given the fact that its character as an asset or a currency is not in doubt, unlike that of cryptocurrency, plus it can do everything else that another cryptocurrency can do because it's a digital currency, shows that the narrative around cryptocurrency is best addressed by ensuring that CBDCs establish themselves in the financial system. This is one of the main reasons that we actually proceeded. We actually went ahead with the introduction of CBDCs in India. This was one of the main reasons. I thought I'd just give you a bit of a background on that. It has various uses. I think some of them have already been identified, a lot of use cases. Some questions that were asked, for example, one question I'm often asked is from the point of view of a user, what exactly is the difference between using UPI and a CBDC? Very good question. The answer is, from the point of view of the user, not much. As far as the user is concerned, it gets the same instantaneous, transfer. Not really bothered, because it's a transfer. It doesn't really matter whose liability it is. It's a bank liability, that's a deposit, or a central bank liability, that is currency. So from that point of view, no, it does not matter. But having said that, we are only thinking in terms of what we are used to now, which is we are thinking UPI, and then saying how is CBDC better. It's not, from the point of view of what UPI can do. But then we have to understand that unlike UPI, which is a money transfer instrument, CBDC is money. It can be transferred, it can be used as a transfer instrument, but it is also money. So the possibilities that it can have as store, as store of value, are things that you cannot associate it with a payment instrument like CBDC or by like UPI or RTGS or anything. Now, these users have to evolve. They haven't evolved yet. They have to evolve going forward. But then there is that potential that what we are looking for when we are saying we will introduce CBDC is not just a payment instrument. In terms of which it's as efficient as many others, or conversely, many others are as efficient as a CBDC transaction, but also as digital money. A simple thing is I can carry 1 million rupees as currency, not a bank liability or a deposit in my pocket or on my cell phone. It's possible. That's not possible with physical currency. That's those things. And if we can ensure anonymity, then this can actually exist independent of a bank account, which basically means that I can hold it on some instrument. It can be a card, it can be my cell phone. I can actually hold, like I hold cash today physically, I can hold it digitally without any constraint of space. So the possibilities that it has are many more. Additional possibilities, because it is money, it's not a payment instrument, the money itself can be programmed. In fact, there is a lot of the innovation that's going on in the private, money space in terms of programming. We can program that. If you can program, I think I was told that some experiment is already going on in Goa of direct benefit transfers of of educational assistance by the government to students. Make sure that it is spent in the accredited educational institutions. You can program it. It can be tried out. Similarly, it can be tried out. An agricultural loan can only be used for agricultural inputs and many others. The possibilities are many. There are many possibilities which we may not be able to think now, but our fintech ecosystem will be able to think of. There are a lot of issues that need answers, that need solutions in the financial system in India and globally. We all know that our financial systems are very effective, payment systems are very effective. There are still a lot of things that need to be addressed in terms of reach, in terms of inclusion, in terms of global cross-border transactions. There are many, many users. So all those users will evolve by virtue of the fact that CBDC is a currency. It is not just a payment instrument. So that is, that would be my answer when someone says that how is it different from a user's point of view? That would be the answer, that its potential is much wider. We'll have to keep that in mind. Anyway, so with these in mind, we decided that we would introduce CBDC. We went about it in a very, very calibrated manner. We have been looking at it, starting it from I think 2017-18. We have had internal groups looking at it. Finally, we decided that we'll start with it. So we took it up with the government. The process started with the FM announcing it in the budget. So, there's a very clear message that government wants it, government wants this, and government wants this instrument to pick up. We followed that with the necessary legal framework, amending the Reserve Bank of India Act, recognizing CBDC as a banknote. Now, this is, this is important because you need a legal recognition, but it's also important from another point of view, which is that we consider CBDC as a digital form of currency or a banknote. We do not look at CBDC as a type of financial instrument, which is different from currency. There are some countries which are saying that central banks which are saying that on my balance sheet, there would be currency and there would be CBDC, they would be different. We don't intend them to be different. We might show them differently, but they are fungible, they are currency. Now, which is why we are particularly, just to maintain the purity of its character as a currency, we have said that it cannot pay interest because currency does not pay interest. Now, this is an instrument of CBDC in many jurisdictions is being looked at by central banks as a monetary policy instrument, and therefore they are thinking of, for example, in the euro area, negative interest rates can probably be better administered with a, interest paying currency. But we are not thinking about that. We are thinking that it is just a currency, not any different from the existing fiat currency. I think that point we will always have to keep in mind. Whenever we have a doubt on whether the CBDC can do this or not, I think that the basic question is, would a currency be able to do that? I think if any of you have ever have a doubt, that is the question to ask, and that's exactly what we have in mind. So we went about that calibrated manner. Legally it was changed, followed up with a concept note in October. As the speakers before me have said, a wholesale launch in November and a retail launch in December of last year. Now, the wholesale launch was basically to ensure that our internal systems are all in working order, because it involves changes to RBI's internal system, changes to RBI's accounting systems, linkages to banks, and banks should also be able to show that as a separate asset hub, and so on. And it has to be created, that entire process. So it was a simple, government securities transaction process. We were particularly interested in ensuring that the, all the networks are working. Then we introduced the retail. Now the basic use of currency is, lies in retail, not so much in wholesale. Even today, without CBDC, the wholesale transactions in currency are very few. Most of us know what they are for, but otherwise it's mostly a retail instrument. So retail is the key to understand how it will be used. How will the average citizen react to a currency which can be held digitally? Why? Because it's very important. Most importantly, our financial system, globally all financial systems, are bank centric. So it is the bank which creates virtually all the money that is used in the system. Money is bank deposits. It's created by banks. It's not created by a central bank or anything. So banks create money, banks provide the payment services. Like I said, other than cash transactions, all payments are movements from one bank account to another. So banks create payment systems, and banks provide the liquidity services. In fact, the best definition of a bank I had read long back was an entity which provides liquidity services to the economy. By creating money and by converting short duration as liabilities into long duration assets, a bank provides liquidity. Without this liquidity provision, no economy can function. So, so these bank centric systems that we have, in that bank centric system, how would CBDC affect bank deposits or bank credit? Is it possible that the population largely shifts to CBDC and doesn't create deposits? In which case, how does a bank operate? How does a bank, give credit? Would one possibility in an extreme case is all credit therefore has to flow through central bank money. Now that's obviously not a lasting solution, not a solution that anyone wants. We want CBDC to be introduced without any significant disruption to the existing system. Benefits will be taken in terms of payments, in terms of storage, yes, but the banking system, the ability of the banking system to create credit and therefore deposits must also remain in place. We also need to understand how monetary policy transmission, for example, will change if there is digital money. So to understand all this, we have to necessarily follow a path of slowly introducing it, studying it, and taking the next step. Now, which required that, which was the basic reason behind our CBDC retail launch. It takes some time. Banks have to come on board. Banks have to put their systems in place. People have to come to a new system. It was one thing when you didn't have something like UPI, and suddenly people see the benefit of UPI and jump in, millions. It's another thing when UPI already exists and you try and get customers whose, like I said, whose experience is not significantly different. So there has to be a separate strategy of acquiring customers into the fold so that they do transactions, we get enough volumes, and then we can study. That is essentially, what we have been focusing on. So one of the things we tried is have 1 million customers by June. We already have 1.3 million customers now. We have about zero point 0.3 million, merchants on it. More importantly, we also decided that we would take advantage of the UPI network to increase transactions in CBDC. So we said that there has to be an interoperability of the QR codes used in UPI. Earlier, what used to happen is we would require the merchants to be onboarded, acquired by the banks, and they have to have a separate QR code for CBDCs. Now, we found that if nothing else, it takes a lot of time. And especially large merchants and all that, they have to do a lot of internal process before they actually adopt a new instrument. So we decided that the users of CBDC need not, be disabled to do a transaction because the merchant doesn't have it. At the end of the day, it is money. It is convertible into bank deposit. So we decided that we would do the interoperability. At this point of time, what happens is you go, there is only one QR code. You swipe your QR code using your CBDC app. If the merchant has a CBDC account, the payment goes there. If the merchant doesn't have it, it comes back, says merchant doesn't have it. Do you want to do a UPI? Or do you want to pay some, in some way? Going forward, I think by the end of this month, probably, we'll have an arrangement. If he hasn't, CBDC, it will settle in CBDC account. Otherwise, it will go to his UPI account and settle. So as a holder, as a customer, I still can do a CBDC transaction. Now, once I get enough transactions, then I would be able to, go ahead and study its impact, macroeconomic, and its impact on the banking system, and so on. So how do we get those transactions? I think just like we got accounts, they were going very slowly initially. Then we decided to take, the participating banks and tell them that let's make a drive and get more merchants in. It was less than 100,000, I think, by at about the end of April. We got 1 million by end of June. We will try the same thing for getting transactions in. We'll have to onboard banks. I think all the major banks need to be in that space. It is in the interest of banks because they themselves can look at the data and study that data and understand behavior. So we'll have to get more, banks in, all the major banks in. We should target, roughly about 1 million transactions a day by the end of this year. So if we have something like that, there would be adequate data for us to study. 1 million transactions a day is not very high. The transactions in UPI are more than 30 crore a day. It's in fact now about 31 crore a day. So 1 million isn't all that high, but it's good enough for us to be able to study behavior. And it's good enough for it to penetrate and be, a top of the mind recall of normal users, normal, customers that are there. So that is essentially what we are trying to do, get interoperability, get more transactions so that we can study and assess what it is. Now, while we do this, I think it's equally important that even banks undertake this sort of an assessment as number of transactions increase, because we would be talking to them. They would, they would themselves have to understand. They would themselves have to understand the larger impact. We will have to understand. It's better that banks and, the central bank, all of us study those transactions to, to understand how this ecosystem can affect the existing payment system or the existing financial system and make adjustments as and when required. What are the important things that we need to do going ahead? One of the things is clearly anonymity. Now, we know the defining feature of currency is anonymity. It's possible in the US to buy, I understand, to buy a car by paying cash. It may not be possible here, but a lot of cash is used for transactions in Japan. Even large value transactions are used. Why? It's not because everyone wants to avoid taxes or that. It's also because cash gives you anonymity, and privacy and anonymity are very, are sort of substitutes to each other. Citizens, if they want to retain privacy, they need to have an instrument. They have an instrument, cash. If you have to provide it in digital form, they have to provide that anonymity. How do we do that? It's very difficult. There are various technological choices. Some choices, transactions can be killed after a certain point in time. Some, there are some other technological choices, but they have to be backed legally. No bank or no central bank or no system will kill a financial transaction unless it is legally provided. So we'll have to explore how it can be backed legally. We'll have to, get into conversation with the government. We'll have to ensure at the same time that this is not inconsistent with PMLA regulations, and then ensure that this anonymity comes. One other thing that we were discussing, and one other alternative that we could explore, is if you have in your wallets, if you have CBDCs and it's encrypted, no one can access that. That's another way of maintaining some degree of anonymity. So various technology choices are there. We will have to look, and we'll have to ensure that how anonymity is to be ensured, because that is what will ultimately make it cash. The second issue that we will have to address is offline. How do we transact it offline? Now, offline transactions is as much of an issue for other payment systems like UPI. We are also trying there. So that has to be, to that extent, it's also relevant to CBDC, but it's also relevant in another sense, which is that if if I have to do transactions on my wallets, I would need the ability, for anonymity's sake, to be able to transact in an offline environment. And transactions can, once it gets online, transactions can be authenticated, but the balance and the names can be masked, or they can be encrypted. So that way you ensure anonymity, you ensure that it also transacts in, transacts in an offline mode and can be stored in an offline mode. So offline is another thing that we'll have to solve. I'm not sure that we have completely solved the issue of what technology to use. We are currently using a hybrid technology, blockchain for the creation by the system and going to the banks. From the banks down to the wallets, it's a separate normal system. Why? Because blockchains, by their very nature, are not given to authenticating large value of transactions, definitely not population scale. It takes a long time for these transactions to be authenticated. So that is an area where our technology supporters are looking at, but we are also looking at what other technology alternatives can be there. That's something that we are working on. I told you about programmability, programmed money. That is also something that we are working on. What we need to focus mostly on in the area of CBDC is cross-border transactions. The biggest advantage that we will get in CBDC is in cross-border transactions. Now here I might come a little close to making some of you unhappy, but the current global payment system is operated through the correspondent banking arrangement. And the correspondent banking arrangement that exists has two features, in my view, that that pose sort of or that add inefficiencies to the system. One is existing systems. The fact that there is only these entities through which transactions can go means there is some amount of rent seeking. So the cost of transactions is very high. As per a World Bank estimate, the cost of a small value transaction, remittance transaction is about 6%. That's extremely high. The one issue of cross-border is, of course, exchange. The exchange margin has to be paid. But the fact that exchange margins have to be 1% or 2% or 3% or even 50 basis points is a narrative that should change with technology. It is not changing, but it should change with technology. We have always been told that a bank has to take the risk. These are very small value. They have to be consolidated into a marketable lot before I can sell, and therefore I am a market risk, so that I can charge 50 basis points is not really justifiable. So in cross-border transactions, one is that the behavior of existing entities creates rent-seeking activities and increases costs. That has to be addressed. That's one. The second risk that happens is a large value of cross-border transactions happen through a handful of banks, handful of global banks. A huge percentage happens through a handful of a dozen global banks maybe. Now, for an international financial system to be stable, it is important that this is spread out across more banks. This is spread out across more institutions. Now, this is where the basic justification is provided for cryptocurrencies. Now, globally, policymakers have largely, are basically ignoring non-backed cryptos like Bitcoin and all that for these purposes. But there is still a narrative that globally stable coins, for example, linked to some currency like dollar, can provide this alternative to the correspondent banking system. It can reduce the cost of that system. Now, we have to be careful here. This is an important thing why we need to, we need to have CBDC, if for nothing else, for global transactions, and we need to push CBDC to get, more global transactions done through this. You see, the arguments given for stable coins is that it's linked to one currency and therefore, it can trade. There is no risk in the instrument. The instrument value doesn't deviate from whatever is the peg to a dollar, means it doesn't deviate from that. It's a good thing. It's good. It can actually get you stable coins. It can get you that international benefit. But it's good for the country whose currency is pegged. It's good for US if it's pegged to the dollar. It's good for Europe if it's pegged to the euro. It's good for sterling, UK if it's pegged to the sterling. If it's pegged to the dollar and it's used in India, it's not so good for us. Why? That's obvious. It's not so good for us because to the extent it replaces the use of rupee in the economy, there is a transfer of seigniorage income from India to private issuers of these stable coins, who are largely in, a few countries. Now, is it something that is good for a global system? Depends on the point of view, but is it something that we would want sitting here in India? Doubt that. So we'll have to keep that into account. That is one aspect that we have to keep into account. What happens to India's capital regulations if we allow this? What happens to India's monetary policy? If we allow stable coins linked to some other currencies, effectively the usual risk most of of dollarization are again back. So if we want to maintain our capital account regulations, if we want to maintain our monetary policy independence, we have to be very careful about allowing these sort of instruments in. So the basic point is stable coins can provide some of this, but they are only beneficial to a few countries whose currencies are linked. For the vast majority of other countries, it is an existential threat to policy sovereignty. That is something that we have to keep in mind, which is why the stable solution is if every country decided to have a CBDC and we develop frameworks where they can, interface with each other, transact with each other. Conceptually, just to explain it, if I have to send some money to my relatives, for example, staying in the UK, currently I have to go through the bank correspondent banking system. But if I have CBDCs in India, the rupee CBDCs, she has the sterling CBDC wallet. It is very easy for me to go to my bank, buy equivalent CBDC if it is linked, and just hand it over to my daughter. It's like I'm handing over physically.